Hey, Amber. Happy Wednesday. How are ya?
Hey, how are you doing?
I'm good. We are live, of course, in the middle of a Fed meeting. I don't know why we didn't think to push this a little bit later today so that we could report on that. But before we get started, I know today we're really excited because we're going to be talking about how to buy a home, after you declare bankruptcy. I know that a lot of consumer spending is up more than ever right now, and I think that there's a lot of people sort of nervous about what's happening with everything going on in the market. So I'm sure bankruptcy is on everyone's mind, not only for people who have had bankruptcy happen in the past, but also for those who may be considering having to file, unfortunately. So I'm glad we're touching on that today. Let me introduce again. My name is Laci, your Las Vegas gal, your bestie, your realtor extraordinaire. This is Amber Coleman, loan officer to the stars, as well as one of the top 200 lending partners in the nation. So let's talk briefly, if we can, Amber, just give a quick highlight on what we're seeing currently with the Fed meeting, and then we'll jump into the how to buy a home with after declaring bankruptcy.
Okay, I love it how you said bestie. You're everybody's bestie. I love it.
Las Vegas, your Las Vegas bestie, lifestyle expert, and hopefully you're a realtor too, if you'll let me do
Yeah,
that. So
yeah, that's awesome. Okay, so let's first talk about the Fed meeting really fast because it's
yeah,
still going on right now as we're doing this live, and it's good news. I'm
yeah,
watching the market flow right now, and everything is getting better, which means rates are going to start moving down as long as like reports keep coming out that support whatever's being said and that kind of stuff. But like just feeling the initial emotion, I hope you could feel it just in my voice where I'm like,
yeah,
yes,
yeah.
finally. It has been a rough year with rates.
Yeah.
It's just been like a roller coaster ride, not with rates, but even every time the Fed speaks, it's a hot mess, right?
Yep,
So like
absolutely.
finally it looks to be like as we're moving through the as we're moving through the what Jerome Powell's saying right now, it looks to be like the market is taking this as good news and it's
Awesome.
getting better and better, which means if you've been on the fence, get off the fence.
Yeah, get off
Because
the fence now because this is what we say all year long, right, Amber? Get your ducks in a row now because the second those rates start to come down, everyone else
yeah,
is coming off the fence too, and you're going to be competing in a very interesting market for sure.
yeah, just before we hop in this live, I'm just looking at the articles, and the articles are coming out with positive stuff about interest rates, which means people are all going to get off the fence together. And then as rates go down, prices go up and stuff like that. So if you could just beat them to it, let's get you that deal while we're still in December, right? And some people get
Let's
into
do it.
holiday mode.
Yeah, don't get into holiday mode. Save yourself some money and get into house buying mode, and we'll go from there.
Yeah. Buy
Thank
yourself
you for
a
the
house for
update.
Christmas. Yeah.
Exactly. Buy yourself a house for Christmas. I love it, especially while all the incentives and stuff are still out there. So, all
Yeah.
right. So cool. That's a good update. Thank you. We aren't really here to talk about that. We will do a separate update if need be, just to focus on that specifically. But we wanted to give you guys live as it's happening, kind of play by
Mhm.
play of what's going on with the Fed. But let's jump into today's topic. So obviously we've talked a lot about different topics this last couple of live streams. We've got tons of really great topics coming up into the new year, and we're really excited because we're doing these twice a week for you guys, Wednesdays and Fridays, barring that I don't get sick like I did last week. But aside from that,
No,
Wednesdays
no
and
sickness.
Fridays, no more sickness. Beyond that, though, so today's about how to buy a house after declaring bankruptcy. I know that I've actually declared bankruptcy in many years ago in my past, was forced to due to the last crash. I was a very new home buyer, didn't really know or understand the kind of loan that I was getting. And so definitely got caught up in the process of what happened with the crash back in the day, like a lot of us did. So being able to buy a home after that felt like a pipe dream, felt like it was never going to be able to happen, felt
Mhm.
like I had to wait 10 years. I just never really understood all the rules associated with it. And I know a lot of those rules have changed. So as we jump into this, I want to just remind those of you who are watching, this isn't just a bankruptcy discussion. If you have questions about anything related to moving to Vegas or buying a house or home loans or anything, debt, whatever, let us know. Drop it like it's hot in the comment box below.
Mhm.
If you're interested in looking at homes or wanting to get off the fence immediately, we highly recommend you do that with what's going on in the Fed meeting right now as we speak. So feel free to text the number that's scrolling at the bottom of the screen or click the link in the description or the pinned comment. I would love to chat with you and just get the conversation started. So with that being said, Amber, can we talk through like types of bankruptcy? Because I thought there were like 9 different types of bankruptcy, but I think there's less than I was thinking.
Yeah, I mean, there are a lot of different types of bankruptcy, but the ones that people will personally file, because there's a lot of different types for businesses. Like businesses have different types that you can file, but the ones that you will typically see are the Chapter 7 and the
Mm-hmm.
Chapter 13. And those are where
Okay,
you're personally filing those to be able to get rid of personal debt. So there's
got
other
it.
different chapters that have to do with businesses and stuff like that. but personal is going to be chapter 7 and chapter 13. So yeah, we can
Okay.
absolutely talk about them.
Okay.
So the chapter 7 bankruptcy, and there's different rules and guidelines to what qualifies you for these. So you have to fit into it with certain incomes and stuff like that. But
Hmm.
chapter 7, you're able to completely wipe out your debt. So you
Okay.
get yourself into hot water with the amount of debt that you have. And right now with the inflation, it gets a little bit rough. And I know you said that you've had to deal with it in your past. I've had to deal with it in my past too. But
Hmm.
how, when I went into the bankruptcy years ago, I felt almost ashamed. But then
Hmm.
after it was over, I was like, I feel like I have a clean slate right now.
Yeah, absolutely.
And
Absolutely.
time goes by fast and you're able to reestablish pretty fast afterwards.
Right.
So like
Yeah.
if it's a tough spot right now, don't feel ashamed. Like we're here to walk you through it, and we've already been through,
Yeah.
things too. And like life happens sometimes, right?
Absolutely. Absolutely. Can I put that thing up on the screen that we were talking
Yeah,
about? Is that
yeah,
okay? All right, let me see if I
yeah.
can do it here. Okay, cool. Actually, I'm going to do this one so that it looks a little bit better. So this is the two. So it's basically saying, how long do I need to borrow or wait before I can borrow money again? This was the biggest concern I had when it came down to
Mm-hmm.
understanding what the heck I could do next. I just felt, again, like I had a clean slate, but I also felt super ashamed, and I didn't even want to put my neck out there again because I didn't want to be rejected. Right. So talk me through, sorry, chapter 7 and chapter 13 here so that we can understand how it really does apply to those loans.
Okay, so the chapter 7 bankruptcy, remember that's the bankruptcy that you have a clean slate. So
Right.
you go in to file a bankruptcy, the court says we're going to accept your bankruptcy and they discharge you and all your debts are discharged with it. So anything you include in that bankruptcy, you no longer owe on anymore. The
Got
minute
it.
you get your discharge paperwork, that's when the time starts. So sometimes
Okay.
people think it's from filing. On this one, it's from discharge date, right? So like usually it's a couple months after you file.
Got
So
it.
from discharge date, if you go to get an FHA loan, which is what most people will do after a
Hmm.
bankruptcy because they're a little bit more lenient on their timeframes on it. So if you go to get an FHA loan, you have a 2-year waiting period from the discharge date of that Chapter 7 bankruptcy. The
Awesome.
same with VA. You have 2 years from VA as well. And then USDA are the types of loans that are done in like rural communities. So like if you're looking in Las Vegas area, it'd be like outskirts, like Pahrump, Indian Springs, Boulder City, like things that are on the outskirts of Vegas. They require 3 years. And then Fannie Mae and Freddie Mac are conventional loans. And there's a 4-year waiting period for Fannie Mae and 2 years for Freddie Mac if you get approved. It's very hard to get approved though, just to be straight up honest with you. So most
I'm gonna be real though. I literally thought up to this point, just like a lot of people are confused thinking 20% down is what you need to buy a house. I thought you had to wait 7 years for a bankruptcy to fall off and for you to be able to borrow money again.
No, I'm glad you mentioned that though, because here's where the misconception is, because there's a lot of misconception about bankruptcy. So when you file bankruptcy, it used to stay on your credit for 7 years. Now it stays on your credit for 10 years. But you follow these guidelines for how long it takes you to buy a house. And right after you file bankruptcy, credit cards will start contacting you right away to reestablish credit after
Okay.
that because you have a clean slate at that point. So it only stays on your credit for that amount of time, but you only have to wait the 2 years to be able to get a regular FHA loan. We're going to talk about
Awesome.
different loans too.
Okay.
So then the other one that I want to go through on this spreadsheet is the Chapter 13 loan. So the Chapter 13 is the type of loan where maybe you don't qualify for the Chapter 7 because you make too much income. And so the court's like, no, we need to work out a payment plan for you to be
Right.
able to repay your debt. So they tally up all your debt and then they look at your income and they figure out a payment plan that works for you and a time frame that works for you. So a lot of times when I'm seeing Chapter 13 bankruptcies, they'll have like 5 years that they have to pay back a certain amount of debt per month. And then after that 5 years is over, assuming on-time payments and everything, then they can get the discharge.
Okay.
So,
Okay. So
so
it's so much more palatable and possible. It's really interesting because I mean, I just, it's so funny. It's like, I think numbers stick with people's heads. I genuinely thought you had to wait 7 years. So this is super exciting, especially because a lot of people throughout the pandemic had probably had to make hard decisions like bankruptcy and things like that.
Yeah.
So with that being said, we're now almost outside of that time frame that most people might have had to do that for. So this could bring a lot of really awesome buyers to the market who maybe didn't know that they had the opportunity. That's great.
Absolutely, absolutely. And like I said, it's not over because I mean these time frames go by fast. So the chapter 13 with FHA, you wait 2 years past the filing date of FHA. So like
Okay.
this is different. So remember how we were talking about the chapter 7 and there's
Yeah.
a filing date and then a few months later they discharge it. And that's
Right.
the date we go on. The filing date for F8 for the chapter 7 is the date you go on for the chapter 13 we go off the filing date. And
Okay.
then did you have a question?
No, I said, okay, that's great. I mean, it's awesome to know that, we don't have to keep track of all this stuff, knowing that you and your team will do it for us and you can advise us, that you have all the ins and outs on every one of them. So some of them go off of filing date, some of them go off of discharge date. It's no different than like, getting a divorce, right? If you're getting a divorce, some people look at, when are you officially separated and done? It's when you actually file for divorce. It doesn't mean that at the very end, that's when you're officially divorced, but all the other stuff stops when you file. So it's very similar when you think about that.
Yeah, absolutely, absolutely. And yeah, you don't have to know all these things. We're just wanting to help you see that there's hope, not to
Yeah.
give up, right?
Absolutely. I love that. How many clients are you hearing right now that are coming through the door that have mentioned bankruptcy? I've had quite a few call me concerned about their credit score. And then as I
Mhm.
dig a little further and ask more questions, they then, divulge, well, we had a bankruptcy and we're waiting for this, and this, which kind of is what brought this up. A lot of people are under the impression you have to wait much, much longer than you really do. And the longer you wait, the more you're going to pay, right? You're losing money every time you put money towards rent versus, buying a home. So just curious what you're seeing, Amber.
No, I am getting a lot of people asking questions about because sometimes what's happening right now, what I'm seeing is the debt has gotten high. Like some people have gotten into a lot of credit card debt and stuff like that. And
Yeah.
so a lot of people are asking about, well, what if I file bankruptcy? And I can never give my opinion on what's better, what's not better, but I can tell you the rules on if you do file bankruptcy, here's the waiting period for that.
Okay. That's
It's
awesome.
and like you said, there is a common thing about like 7 years is the waiting period. That's never been 7 years for any of the programs, but that's how long it used to be that it stayed on your credit. So I think that's where that misconception happened.
Got it. Got it.
Mhm.
Awesome.
Mhm.
I'm gonna pull this back up again. We've got quite a few questions coming in, so I definitely want to lean over to those in a second. But let me
Mhm.
put this back up here. Sorry. So as we're looking at the opportunities to apply for loans, obviously whatever your timeline is, let's let Amber make sure that we're looking at the right dates, the right discharge versus filing date, all of that. If
Mhm.
this is something that you're considering, but we've got FHA, of course, you have VA, USDA loans, Fannie Mae, and Freddie Mac. Are there loans outside of these that are allowing people to take advantage of, borrowing after bankruptcy?
There are, and one thing I want to point out really fast too, if you filed a Chapter 13 bankruptcy, we have to show 12 months on time payments. And you can even get approved for a loan while you're in the bankruptcy before discharge on the
Oh, wow.
13th. Yeah. So
Okay.
that one's kind of cool. If you do get approval though, so like we'll go through get an approval and then you have to go get court approval, which takes a couple months to be able to do. So the reason why I want to mention that is because if you're already in a Chapter 13 bankruptcy, just make sure you're making your payments in that bankruptcy on time because we'll always look at the payment history on the
Hmm.
bankruptcy there. And then
Okay.
the court approval, your attorneys know how to do that.
Okay. Awesome. I've got a couple questions coming up. Let me pull some of these up because these are really, really good. Let's see. Matt Smith says, does the bankruptcy remove any liens attached to a property? I know from my experience, if a lien is attached to a property, like for instance, if it's like a mechanic's lien and you had a pool put in and then you decided, I don't want to pay the pool guy because I didn't like the job he did or whatever, you're in some sort of a debacle where there's a lien now put onto your home, that actually is going to stay attached to the home. It doesn't attach itself to you. So when you sell the home, though, it will become a problem and need to be paid or need to be handled and situated in order for you to be able to pass that home into another person's name. So is that your experience as well, Amber?
Yeah, in the liens on houses, you got to kind of really consult your attorney about those because I've even
Yeah.
had people that have maybe had a first and a second lien, like a first mortgage and a second mortgage on their house. and then have filed a bankruptcy and kept the house, but expected the second mortgage to go with the bankruptcy. And there's different laws and rules on those depending on the bankruptcy and stuff like that. So yeah,
Right.
those kind of questions with the liens that are attached to the property,
Right.
make sure that you're talking to your attorney on those things.
All right. Let me look at this one. This is from Oscar Love. I had this job with the government and part of its collections. I'm always amazed to me. Oh, sorry. I'm always amazed that we need copies of their payment history for a mortgage. And then some of these have been in bankruptcy. So he's basically saying he's always surprised that there's people who still have a mortgage and yet they're still dealing with the bankruptcy stuff. Like it is possible. It is possible to do all of this and what we're
It is
talking about.
possible. Yeah, that's why we're here to give hope, right? There's always
Yeah.
different ways to be able to get things done. So
I love it. Amber Laci, looking on chapter 7 and 11 and 13 bankruptcy, it seems like all have increased in the last year. Can you see it based on how many houses are for sale?
well, we can't, well, you can, sorry.
No, go ahead. Go ahead. No, you're good.
I mean, we can't see the reason why the houses are for sale,
Right.
but in talking to a couple bankruptcy attorneys, their business is definitely increasing right now.
Yeah.
So
So
there's a lot
yeah,
more
I
filings.
think it's like we were saying, over the pandemic, there's a trickle effect. I hate even bringing up the pandemic because it feels like such old news, but it's
It
still
does.
affecting us today. So, through the pandemic, I know a lot of people had to make some hard decisions. A lot of people, even right now, consumer debt is the highest it's ever been ever
Mhm.
right now across the nation. So I think a lot of people have been living off their credit cards. Maybe some people live in large. I don't know what happened, but with all that being said, we're starting to see a lot of that catch up with us. So I'm definitely seeing that. I'm not seeing a lot of foreclosures. I mean, there's definitely always an increase in an up and down each month
Mhm.
in certain numbers. Foreclosures are, when they're coming around, it's only for a specific reason. There's so much equity in the market right now that not a lot of people are being forced to foreclose, thankfully. But yeah, like you said, Amber, we can never know really why they're selling or if that's a part of the process.
Mhm.
It would be nice to know that. It would be kind of an interesting marketing tactic. But yeah,
Yeah.
should I put this back up? I wanted to talk about this document that you had given us again, just related to foreclosure and short sale. Because as we're talking about foreclosure, we're talking about short sale. We're seeing a lot of increase in people who are having to make some harder decisions. This is why we want to bring the hope today, letting you know, hey, if you're looking at doing that, if you have to make that hard decision, you're not out of the running. There's definitely ways that we can slice and dice and still get you into a home, and you're not going to have to wait that 7, 10, whatever years. But so with the short sale and a foreclosure, if that is a way you have to go, whatever that looks like, it looks like there's a different timeline for each of those as well.
Yeah, for short sale and foreclosure, there's different timelines depending on the type of loan that you're going to be doing. So
Right.
we can go through those timelines. One thing that I want to point out with that, and I know we had a client together that didn't know, was talking to her friends. There was something horrible that happened in her life, and her friends were like, "Just let the house go, just let the house go." But then after getting on the phone with Laci, Laci was like, "Wait, you have way too much equity. Why would you let the house go? Like
Yeah.
there's always options for it." So like, but if you get yourself stuck in where there's no options, there's no equity in it to pull yourself out, and you have to do like a foreclosure or a short sale, then yeah, foreclosures on FHA loans and short sales, you have a 3-year waiting period after the date that it goes back to the bank. So
Okay.
remember, you're going to start the foreclosure process, and then there's a process that they do before they can foreclose on you. There's laws in place with that. And then once it goes back to the bank and it's recorded in the bank's name instead of your name, that's when the 3 year starts, not
Got
when you
it.
start missing the payments.
Okay.
Um, and then conventional, typically you're looking at, you're for foreclosures, you're looking at 3 to 7 years, depending on the type. Um,
Okay.
Conventional is not as nice with foreclosures as FHA is. So a lot of times we'll try to do FHA loans when there's a
Right.
foreclosure in the past.
Yeah, and I think that's something to bring up because I think a lot of people like see one thing like that. Oh, it says 3 to 7 years, and then they assume that's
Yeah.
the only kind of loan they can get. They don't even realize that the discussion is about that type of loan. It's not all types of loans. So I love this spreadsheet or this document that you created, this flyer, because it really helps us understand that there's not a one size fits all kind of experience when it comes to buying a house and getting a loan. And specifically, if you've had a Chapter 7 and a short sale or a foreclosure and a Chapter
Uh-huh.
13, or if there's all these things that we have to piece together, it's really going to help you and your team guide them the right way and to help them see the light that there are many lanes that you can drive down for this experience for sure.
Yeah, absolutely. And here's the thing too that a lot of people don't realize. When life hits you really hard, and let's say it hits you really hard where there was no that like completely extenuating circumstances is what we call
Right.
in the loan business. There are rules that can be bent for extenuating circumstances. So these aren't set in stone. If your
Right.
circumstances were so extenuating that it would tell Fannie Mae, FHA, VA, no matter what you're doing, with a letter of explanation and proof that, hey, this was something that wouldn't have been done had this not happened. I couldn't help it, like death in the family, stuff like that, like horrible things. Then those rules become less than what you just
Awesome.
saw on there. So it's
Yeah,
always worth making a
that's,
phone call.
I don't even think I realized that was the case. So you can actually, because there's life happens, like it's almost like I think the assumption is that you're dealing with the government or banks and they don't really have a personality or they don't care. But to your point, like you've been able to overcome a lot of the issues that people might have blocked them from buying before just from making a phone
Yeah,
call and writing a letter.
yeah.
Got it.
Yeah, if you are dealing with governments and banks, they probably won't care, but you're dealing with me.
Oh, okay, girl. Another
So
reason why you should reach out to us. Okay.
yeah. So we'll talk about the circumstances behind it. And if
Yep.
there's any way to pull out extenuating circumstances to be able to put in there, then we'll talk about it and say, okay, let's do this, this, and this. Hey, you
Okay.
asked me a question earlier, Laci, too, if there's any way to do it with less than the timeframes that was on that list. And
Mm-hmm.
there is. So there's loans that are called non-QM loans. They're loans
Okay.
that don't fit into the box of conventional FHA, VA. They're different than those loans, but they allow for different rules to happen. So these loans allow for you to take a loan out at 1 year after a Chapter 13 or a Chapter 7.
Okay.
The Chapter 13 that they go off the filing date. Chapter 7 they go off the discharge date. So it's different there, but it's 1 year. Now these loans require a very substantial down payment and the rate's higher. But if you get yourself into a bind and you've come into money recently and you could put it down, we had one client that did that, took the loan 1 year out of bankruptcy, put the money down, and then after the 2 years was up, we refinanced on an FHA loan.
Wow.
So
That's
there's
awesome.
ways to do that as well.
See, I think the more we do this, the more we talk about this, the more we are focused on helping people be enlightened about the reality and the truth and the situation out there. I think it just really makes people have a lot, to your point, have hope, but really have I don't know, feel stronger, feel a little bit more enlightened, a little bit better
Mhm.
understanding. And then I just think it helps people feel like better in the process of doing their research. A lot of people we work with are relocating to Las Vegas, which is beautiful. A lot of people also
Mhm.
live here, but the majority of our clients that we work with on together are, relocating. So there's already a lot of mess and research going into all of that. So I'm hoping that what we're giving and what we're sharing is helping people feel stronger as they make these decisions and wiser. But I want to just say all that and remind you guys, you don't have to know all the answers. You don't have to write all this down and take notes. That's what we're here to do and to help you with, right? So I'm on
Mhm.
the house buying side. I'm on the part that, is the fun part. I like to say, you may think your part's fun, Amber, but my part's the most fun. I think we get to go out and look at homes. We get to decide what kind of area of town you want to live in, the lifestyle you want to lead, all the good, fun, cool things to do here, and just get you settled in that way. You're helping on the backside in the financial realm to make sure that they're settled and that they are absolutely maximizing their funds, their
Mhm.
assets, their opportunities here. So it's just, you guys don't have to do the thinking. We know what we're doing, but we love to share this with you because it helps you realize that we are the subject matter experts and we want to be yours and
Mhm.
work with you in this process. So
Mhm.
let me see here. Oh, Sammy's asking a great question. She says, hey ladies, if a couple is buying together and one has a lengthy employment history, but the other one doesn't, what will that hinder the approval for an FHA loan?
So with FHA, great question, Sammy, by the way. Okay. But
Hi,
with
Sammy.
Yeah, so like, okay, I'm just gonna give you an example, right? So recently I just closed a loan for somebody who she was a stay-at-home mom for like 11 years. She'd been back to work for a year and a half on the
Mm-hmm.
job. FHA requires 2 year history, but we can go back as long as time to as long
Mm,
as we can verify the other part of the 2 years. So she
okay.
had a job for 6 months, 11 years prior. We verified that and got the loan done. So we just have to provide proof of 2 years. And if there's a gap in there, we have to explain the gap and
Okay.
then and then and then go forward. So like let's say yours is 10 years and somebody or like one of the 10 years and the other one is has barely a year, but previously worked a year before that, yeah, we just have to prove 2 years history with gaps
Nice.
in between explained.
Because I mean, there's often instances where like a girl, starts her career and then gets pregnant, decides to stay at home
Mhm,
with the kids for 5, 10, 12 years, whatever.
mhm.
Now comes back, works another year or two, and then they decide to buy a home. You can piece that together and explain stay at home mom, right? Or
Yeah,
illness, or jail, or God knows what. Like there's a lot of different
yeah,
things that come
we've
up in
explained
people's
all of
lives.
those.
Okay, and they've all worked, right?
They've all worked. Yeah, like especially like in the pandemic, a lot of times people took breaks during the time of the pandemic because they didn't want to take the risk of being out in the public because their job was kind of putting them maybe on the front line a little bit. So
Right.
then there's a lot of different explanations that you can place. Sometimes it is gel, just like you
Yeah.
said before, and we just show the gap reason and then
Hmm.
move forward with it. We just have to show 2 years though.
Awesome. This is another good question. In Europe, you can buy insurance that covers unexpected or hidden house damage, also in the event of a bankruptcy from the seller. Is that available in the US? Yes, it is. So there's a couple things that we have that you're required to have. Number one, you're required to have homeowners insurance if you have a loan. So the homeowners insurance will absolutely help you cover hidden house damage. Of course, we do the due diligence when we help you buy the house to get inspections, look at the walls, scan the walls for leaks, look at everything we can. But inevitably, stuff does happen that you didn't know was going to happen. Not often because it was hidden on purpose, just maybe we didn't know what was going on. So yes, that's typically a homeowner's insurance claim that would go in for that. Also, if you have a home warranty or something of that nature,
Mhm.
that would help with repairs. And then in terms of the to cover past liens that weren't finalized before the house was closed, or a bankruptcy that hits the house somehow, or so anything that's connected to the house that wasn't your problem or your fault. Title insurance is typically something that is purchased for you by the seller, I believe. I always forget who pays for that, but I'm pretty sure it's the seller, and it covers you from a title perspective to keep you from being held responsible for some of those things.
That's a great question. All
Great
kinds of good
question.
insurance that you just mentioned.
Yes, I love it. So Amber, I guess let's wrap this up. We don't have too many more questions. I want to say thank you to everybody who said hi to us today. We really, really appreciate it. I'm really, really excited about doing more and more of these. So let me plug what we've got coming up just so you guys know. So in the next couple of weeks, we're going to be doing, actually Friday, we're going to be doing one that talks about how to buy a home if you are self-employed, bank statement loans. This is a really hot topic that comes up a
Mhm.
lot because, a lot of people are gig workers these days. A lot of people are self-employed
Mhm.
because they're running around getting a 1099 from Uber or from who knows, Instacart, whatever it is. So because
Mhm.
of that, those are still real jobs, but a lot of times it doesn't necessarily in the traditional fashion have the ability to get you approved for a loan because it doesn't align with a lot of what those banks and loan requirements are. So we're going to talk through some loans, the bank statement loans on Friday. So tune in noon on Friday. Super excited. It's already ready to go on the channels. If you want to just click the button to be reminded, we would love to have you join us. And then after that, we're going to be next Wednesday talking about 5 problems first-time home buyers never see coming. So we're going to help walk you
Mhm.
through basically how to overcome and be aware of and stay ahead of 5 issues that most of you will never see coming when you're buying a house. We've also got DSCR loans, basically investor loans, how you can invest in real estate without income history. That's going to be another one coming up this month. And also how to get a lower mortgage payment. Ding, ding, ding. Who doesn't want a lower mortgage payment? How to get a lower mortgage payment without refinancing your house this year. So we're walking into a new year. We've got a lot of people trying to save money. Those are some subjects that we're going to be covering in the coming weeks. Stay tuned. We're coming at you twice a week, every single week, Wednesdays and Fridays. Miss Amber Coleman and myself here, really, really excited just to bring you as much information as we can. As we're ending and rounding out 2024, I know I've been saying it. I know you have been saying it. We both feel like this is a juicy, crunchy, beautiful time to buy a house and to think about buying
It
a home because as we said all along today on the Fed meeting, it seems that what do they say? Flagging, indicating, what are they doing? They're
Oh,
signaling. They're
they're
signaling,
signaling. Yeah, I was like, what was the word
signaling.
they used?
They're
Signaling.
signaling
Yeah.
rate drops. And so
Mhm.
we're letting you know now, saying it now. Maybe don't lean all the way into the holidays this year and maybe lean into buying a house instead because when we hit January, February, March, I promise you we're going to be back to seeing prices go up, bidding wars happen, and we don't want you to have to participate in that experience. So we would love to start talking to you today. Even if you don't buy today, we want to talk to you, get you ready. Doesn't matter if you're buying now or 10 years from now. Let's talk today. Let's become friends. Let's get on the same page and just work out a plan. Let's get you dialed in. What do you think, Amber?
I think so, especially in the Las Vegas area because the amount of people moving in here is crazy. So I say Get a house for Christmas. That's
Oh
what I
man, if
said.
someone wants to buy me a house for Christmas, I'm in. I'm all in. I'm ready for it.
Yeah.
I
You
am
know what? You
ready.
can buy me a house for Christmas too. If there's anybody on there.
My dog agrees too. He just barked. He said, "Barf." He wants a house too. So
Little
anyway, I
cutie.
want to thank you guys for joining us. Please, please, please tune in to our upcoming events. Again, it's this coming Friday and then next Wednesday, of course, at noon. We'd love to be here for you. If you need anything in the meantime, if you want to talk about Vegas, want to ask about Vegas, my personal cell phone, that's right, mine is scrolling across the bottom of the screen right now. Feel free to text or call me anytime. Would be happy to make myself available. Text is faster. It's going to get you on the books and in the calendar, but would love to chat with you. Otherwise, Amber, it's halfway through the week. I was hoping it's Friday, but it's actually hump day. So happy hump day. We're gonna sign off. You can buy a home after declaring bankruptcy, and you don't have to wait 7 years. You don't even have to wait more than 2 years most of the time. So let's talk to you. If you're thinking about filing bankruptcy, let's start even before you file bankruptcy. Let's start making that plan with you for when you're gonna start shopping. And if you've already done that, let's talk. We'll make sure Amber and her team define exactly the day that you're allowed to go shopping and that we can get that baby going for you.
Yeah, and not only that, help you to align yourself in the best way possible on credit after filing that bankruptcy. So call
Absolutely.
before you hit those marks of 2 years or whatever you're
Please,
looking
please,
for.
please. Yeah, you don't want to wait. You don't want to wait. All right, guys. Thanks again for joining us. We will see you next time. We'll see you on Friday.